Hello, Southwest Pilots. Charlie Mattingly here with Leading Edge Financial Planning. And today I want to go over the deadlines for the new Southwest life insurance, the $800,000 basic life insurance that is now going into effect on March 21st for the new contract. So first thing we'll do is cover some important dates, deadlines, so that you know the facts and what to do and when. Then I'm going to talk about just some other numbers about the insurance itself. And then finally, I'll get into how much does it cost and maybe even offer up some tips, general rules of thumb about how much you might need and how to make that determination. First, let me clarify. We are not associated with SWAPA, Southwest Airlines Pilots Association. We're not associated with Southwest Airlines. We are an independent financial planning firm. And so we're helping our Southwest pilots determine what to do with this life insurance, keep it, reduce it, etc. So let's go through now and jump into the important dates. This life insurance, $800,000 of group term life insurance with accidental death and dismemberment, goes into effect on March 21st, 2024. There's no action required. If you do nothing, you're going to get the life insurance. Okay, so remember that. Also, there's a special open enrollment right now going on until March 18th that gives you the option to reduce this life insurance down to the original amount of $50,000, or anywhere in increments from $800,000, the full amount, $500,000, $400,000, $300,000, $200,000, or again, $50,000. Big picture here is if you're down to $50,000, as you are right now, as all pilots are right now, then there's no taxes that you'll pay on the imputed income. We'll get to that in just a second. What the heck does that mean? We'll get to it in a second. How much are you going to pay? All right, so we talked about the special open enrollment we're going on right now to March 18th. The important thing to remember is, let's say you missed this one for whatever reason, you'll have another opportunity in the fall open enrollment season, and then every open enrollment season in the fall thereafter, to either adjust this life insurance and get rid of it, whatever you want to do there. So if you do keep this life insurance, again, you don't do anything by March 18th, you will have the $800,000 of life insurance. And the first adjustment you'll see for the tax withholding will be on April 5th, your April 5th paycheck. So go to workperks.swalife.com to make this change happen again by March 18th. Okay, so that's part one of this video. Part two, I want to share with you what are the basic facts, the things that you need to know. I think the most important thing you need to know, and the biggest misunderstanding, is you do not pay the imputed income that you'll see on your pay stub. And I'll show you what that looks like. You will pay the taxes on that imputed income. So let's jump into that right now. Now, this is an IRS issue. In other words, anytime an employer gives an employee a benefit, in this case, life insurance over $50,000, they are required by IRS rules and regulations to have the employee, or pilot in this case, you, pay taxes on the premium, the life insurance premium that Southwest pays. So that's important. You are not paying the imputed income. First of all, I'm going to show you what this is going to look like on your pay stub. Let me see if I can share my screen real quick. Okay, this is a pay stub, and I just took a screenshot of the bottom left. This is going to be on the bottom left of your pay stub. And this is the section where you have imputed income. Currently, most of you will see swag, taxable, imputed. If you use any of your swag points, again, that's a benefit, just like this life insurance, where Southwest pays for the benefit, but you have to pay taxes on that. That's really important to understand. And again, you're going to see these numbers on your pay stub and think that's a lot of money. And that's not what you're paying. You're paying the tax on that. Okay, so let's jump in and talk about exactly what do you pay, what will you pay for these life insurance, for the $800,000 of life insurance. What will you pay? So one of the most important things to be able to do before you could accurately calculate how much this life insurance is going to cost you is know your marginal tax bracket. Now, we're not going to talk about standard deductions and your adjusted gross income. It's beyond the scope of this call, this video, but roughly you can look at these tax brackets, and if you're married filing jointly, here is your column. If you're single, here is your column. Most of you will probably be in the 24% tax bracket. A lot of you will be in the 32%, and even maybe there's a few of you, I would say the vast minority might be in the 35%, and I hope some of you are in the 37%. But anyway, for today's purposes, we'll use 24% and 32% tax brackets to assume that's what the majority of our audience is as far as tax brackets are concerned. So let's take a look and see what these exact calculations might look like. Let's pretend that you are age 52 and you are in the 24% tax bracket. Okay, here's some numbers. I'll put some numbers here. You can stop the video if you want and pay attention to these and do the math if you like. But for now, let's assume you're age 52. You're in the 24% marginal tax bracket. So that means you go to this column. These are age banded. That means this rate is going to be flat from age 50 to age 54. So if you're 52, you're going to be paying, this is the cost you're going to be paying for the life insurance. Now, let's just say you decide to keep all 800,000. Your imputed income for the year will be $2,070. Okay, that's what Southwest Airlines is paying for your insurance. They're going to run it through your pay stub so that you can pay tax on it. And I just showed what that's going to look like. So what we do is if we know we're in the 24% tax bracket, we know our age, we multiply that by the premium, the imputed income, and we get the number. I'm going to have to actually do the math right now. And I will tell you that 2,070 times 0.24 is $496.80. Okay, that's an annual cost. Again, that's 2,070 times 0.24%, $496.80. That's per year. Per month, you would then be paying $41.40 per month. Okay. My guess is that most of you, if that's your situation, you're not even going to notice that premium come out of your paycheck. But nonetheless, that's how much you're paying. So what if then you were in the 32% tax bracket? Let's go ahead and take a look at that real quick. You can do the math just as well as I can. But basically, I'm 52. My imputed income is 2,070. Now I take my 32% marginal tax bracket. That's going to help me determine what I'm paying. And that is going to be $662.40 per year of taxes that I'm paying on the imputed income. If I want to get a monthly number, that's basically $55.20 per month. All right. So big scheme of things, relatively cheap insurance. Now, when you get into the age 60 to 64 band, it's not cheap, and some people might say that's expensive. Well, it depends on what your definition of an expense is, of course. But if you go out to the market and you are 60 to 64, and first of all, they're going to absolutely require a health check to get life insurance. Secondly, it is going to be expensive because you're older. And so relatively speaking, it may not be that expensive. Now, if you've gotten life insurance when you're back in your early 30s, late 20s, and you're comparing it to this policy, well, then it absolutely will be expensive. So some of the times I talk about, hey, let's just, if we're in our early 50s, late 40s, let's just keep the life insurance for a while and we can reevaluate it. Each one of these age bands, you don't have to keep it. You can reduce it to some combination we talked about before. So you have a lot of options. Okay, so we've talked about the cost and what you're paying, and I beat that like a dead horse, I'm sure. So hopefully that makes sense. The other things that are very important to consider, and I want to remind people that this life insurance is portable. Okay, it stays with you on disability at no cost to you. I'm assuming when SWAPA says at no cost to you, I'm assuming that you're still going to pay the tax on the imputed income, but you won't pay the premium. Also, the new contract made the, in the words of Damien Jeanette on the video, a lot of our materials from SWAPA, they have put out great resources. But Damien Jeanette said the supplemental insurance stays with you as long as premiums are paid if you're out on disability. Now, I think what he meant by that was if you look in your open enrollment guide every fall, they call it optional life insurance, which you can get up to 10 times your salary, up to 2.95 million at the most. So that insurance stays with you if you pay the premium. The $800,000 stays with you, or is portable, as we say, no cost to you, except that I'm assuming you still will have to pay the taxes on the premium that Southwest pays. It's my assumption. I didn't see that written anywhere as far as paying the taxes if you're disabled. All right. Let's see here. What do we think about this life insurance? You know, we've talked about the important dates here that you need to keep in mind, how to either get rid of it, keep it, reduce it, whatever. We've talked about those things. We've talked about what it's going to cost you and what your options are. So what do we think about it? I think it's great life insurance. I think in most situations, probably I would default to keeping it. And I think that probably applies to a lot of people. Even if you have other life insurances you already have, more life insurance, quite frankly, is better unless you you feel like you're already overpaying and already overinsured. We don't see many people that are we feel like they have too much life insurance. Quite frankly, we just don't see that much because most of the time we don't have as much as we really need. And that's just my experience anecdotally, what we see. It's very inexpensive. Like I said, it might get more expensive as you get to age 60 and you may not want to pay for it anymore, and that's fine. And hopefully by that time you won't need it as well. But in general, it's really a great benefit. Again, my default would be to keep it, or maybe if you feel like you're overinsured already, maybe just reduce it a little bit. The beautiful thing here is that you are not required to have a medical. It's pretty phenomenal. And so I know a lot of you switched over to the regular plan at one point and you lost the majority of your life insurance. You have maybe had a medical event that had happened and now you can't get life insurance. This is the key for you. This is your answer, which is really good. All right. Let's see. We do know just one last detail for this life insurance is that it is also includes, I should say, accidental death and dismemberment. And that will also pay out $800,000, but you have to die a certain way. I'm just throw it out there. You have to, if you die in an accident or you become injured somehow. I injured my eyes about 10 years ago, and luckily it was temporary. But had that been permanent, accidental death and dismemberment might have paid out. So in general, I don't count on accidental death and dismemberment insurance because I have to die a certain way. It may or may not pay out. So for me and my family, I don't even include it. I don't even consider it. I want to be able to count on insurance that I know, regardless of what happens to me, it pays my family. So that's just my 2 cents on the accidental death and dismemberment edition. You don't pay more for that. The rates that we've gone over include the accidental death and dismemberment. So those are some things to keep in mind there. Okay, lastly, this is part 3 of our series. What are some common questions we've been getting? So far we've covered the important dates, how to adjust or maintain this, what is the open enrollment. We've covered how much it costs, what we think the benefits are to this. And now let's cover a couple things as far as common questions. Hey, how much do I need? How much life insurance do I need? How do I figure those things out for me and my family? Well, there's a couple ways to do this. One way is you can actually model it. You can go to almost any online calculator and you can put in your assets, your liabilities, and it will help spit out some amounts that it thinks that you might need. In general, think of it this way. Add up all the liabilities that you may have, your home, if you still owe on that, cars, school loans, whatever it might be. Throw in there college for if you have 2 or 3 kids, you can pretty much count on $100,000 per child to go to a 4-year state college. So add in all those liabilities, all those major future expenses, and then you can subtract out your, let's say your portfolio. And I say portfolio because I want to only include assets that can produce income for my family if something happens to me. So let's say I've got a $500,000 home mortgage, 3 kids at $100,000 a piece for college. That's 300,000 plus my 500,000 mortgage. That's 800,000. Let's say I've got a couple car loans and school loans, etc. Let's say I've already got, there's $1 million there. Again, just making that number up. Well, you're going to want to be able to pay that stuff off if something happens to you, most likely. So you need $1 million of life insurance just to pay that stuff off. Now, if I want my spouse to have any kind of lifestyle that we currently have, think of this rule of thumb. It takes about $1 million to create $40,000 of income, and that's pre-tax. So if I want my spouse to have $80,000 of gross income when I'm gone, then I need about $2 million worth of life insurance, not including the other assets that I might have. So that's very basic rules of thumb, but you can kind of scratch that on a piece of paper if you wanted to. It doesn't have to be super complicated. We do modeling where we model the current retirement that you want, and then we remove one of the persons and go, now, how are we going to make this happen? So that's another way to do it, much more detailed, of course. So those are some things to think about. So now, where do we go to get this life insurance? Again, Southwest, your employer, in this case, Southwest Airlines, might be the only place you need now that everything is portable. It changes the game significantly. Some of you have outside life insurance policies. You're wondering, should I keep those? Well, the only thing you can do there is compare rates. Again, if you got $1.5 million term policy at age 25 and you're 55 right now, you might want to keep that one because it's going to be very, very inexpensive. So, so that you just have to do the cost analysis there. But again, in case of default, when in doubt, just keep what you have. It's not terribly expensive, and it's a pretty awesome deal to not have to have a medical. All right. So today we talked about the important dates. Remember, this is effective March 21st, 2024. You have to make any changes by March 18th. You do that on workperks.swalife.com. Remember, you do not pay the imputed income. That's what Southwest Airlines pays. You pay the tax on the imputed income. And we went through how to do that a little bit and showed you what that's going to look like on your pay stub. It is portable. If you become disabled, this $800,000 goes with you, as does the supplemental or optional life insurance, whatever we want to call it, that stays with you. Okay, you do have to continue paying the premiums on the optional life insurance, but it stays with you. All right. This is very inexpensive in a way to get life insurance. It's a very inexpensive way to get life insurance, I should say. And when in doubt about how much you need, keep it, get more. We've been on the other side of this story where we've walked with spouses left behind and there wasn't enough life insurance. And that's no place you really ever want to be. Those are all the things we wanted to cover today. We appreciate your time and attention. Hopefully this video was helpful. You can reach us on our website at leadingedgeplanning.com. You can email me at charlie@leadingedgeplanning.com. My cell phone number is 865-328-4969. You can call, text there. Our office number, if you'd like to call anyone on our staff, 865-240-2292. Any of our advisors can help you with this Southwest life insurance decision. They know the material as well as I do. So hopefully this is helpful. We look forward to hearing from you. Next video, we will get out. We will talk about the Southwest profit sharing, your ability to roll that into your SWAPA 401k if you choose to. I think that implementation timeline has been moved back a little bit. I think July 2024 is what I've heard most recently. So we'll see what Southwest Airlines is able to negotiate with Empower to easily, hopefully, roll your profit sharing over into your 401k. Anyone can do that now if you're over 59 and a half, but soon maybe everyone will as long as you're vested. All right, more to follow. Thanks for listening. Have a great day.